Welcome to the ChemSource 2009 podcast update. We're here today with Chris Cerimele, Managing Director and Global Co-Head of the Chemicals Group at Mid-Market Investment Bank Lincoln International. Chris, how have recent economic events impacted M&A activity in the chemicals industry?
Thank you for the question, Mary Kate. Recent economic events certainly have had an impact on M&A activity. The chemical industry has been struggling over the past couple of months. What we've seen beginning in late October was a significant drop-off in revenue for many chemical companies, particularly the commodity firms. This was a result of a demand drop-off, but also many of their customers were correcting inventories. In the face of this, it created a good deal of uncertainty over what the future would be in terms of 2009 and beyond. And as a result, many firms pulled back on M&A activity as they focused on correcting their own businesses and making sure that they were stable before they went into other activities.
What is the current status of the credit markets and how are they impacting M&A activity?
Well, the credit markets continue to be a challenge for the M&A market. We saw many transactions put on hold during the fourth quarter because of lack of financing ability. The senior credit market has basically dried up right now, with the exception of asset-based financing. If an acquirer has a strong balance sheet and can get asset-based financing, then they generally seem to be okay. Or if they have a strong relationship with an existing lender, in many cases we are seeing banks being willing to provide senior debt facilities. In the absence of that, what we're seeing most often is people are turning to subordinated debt and mezzanine, and there continues to be an active market for that, but it is obviously much more expensive.
Are you seeing any recent trends in the M&A market right now?
Yes, we are seeing several trends. One of the first trends is that due to the economic environment, we're seeing an increase in companies that are facing financial difficulties, going through restructurings, bankruptcies, and so forth. And so that is spurring M&A activity as firms need to do something in order to raise capital. The second trend that we're seeing is an increased creativity by acquirers in order to deal with the credit markets. So, for example, instead of all cash transactions, we're seeing more use of earnouts, seller notes, and other sorts of structured transactions designed to get over the credit crunch.
What types of chemicals companies are making acquisitions today? Are there certain geographies or sectors that are more active than others?
Well, it may surprise you to hear this, but actually there are quite a few companies out there that are looking for acquisitions. The most common profile for a company is one that can get through the credit crunch, meaning that they already have ready access to capital, be it through cash on hand or an existing credit facility. Many foreign acquirers fit this category, such as Japanese firms or Indian companies, because their economies haven't been suffering as much as they have been in other parts of the world. However, we are having significant discussions with US and European firms who are taking the view that while the current economic environment may not be great for their companies, they realize that opportunity doesn't always come at a convenient moment, and this could be a very good buying opportunity. In terms of sectors within chemicals, we're seeing significant activity in pharma chemicals, paints and coatings, and other specialty chemical sectors.
What about on the other side? Who are the sellers?
Excellent question. There are really two sorts of sellers in this market that are most common. The first is companies that are experiencing some sort of difficulty and really need to sell. They may be in bankruptcy, they may be getting pressure from their lenders, or otherwise have some reason that they need to sell in this market. The other situation we're seeing is large corporations that are looking at their portfolios and doing some pruning, or maybe they're making an acquisition and in order to satisfy regulatory authorities they need to make some divestitures. We do see strong, healthy companies in this market that are for sale, but given the M&A market conditions, they are a little bit fewer and far between.
What about private equity firms? Are they still active?
Well, private equity firms are still active, but they are probably some of the most challenged in this current M&A market environment. The challenge they face is that they have significant pools of equity capital that they still need to put to work, but on the other hand, their access to capital to fund LBOs has dried up significantly. What we're seeing is a significant amount of creative thinking on the part of private equity firms. In many cases, this takes the form of increased equity in deals. So whereas a firm would have put maybe 30% equity in the deal in the past and funded the rest with debt, firms are considering putting much more equity, even 100% equity in some cases, in a transaction. The bet they're making is that the debt market will come back in the next 12 to 18 months, and they'll be able to pull out some of that equity. They're also utilizing structures such as earnouts and seller notes to try and get through things. And in some cases, frankly, they're looking at taking minority positions in companies, again, with the idea that they could take a control position in the next year or two.
What is your outlook for M&A activity in the chemicals industry in 2009?
Well, in my view, there's going to continue to be activity in the M&A industry in 2009, but it may take on a different flavor than what we've seen in the past. We're actually fairly busy right now in discussions with many companies. Most of the conversations that we're having are with corporations that do have capital, and they're looking at 2009 as a buying opportunity. On the other hand, we think there are going to continue to be sellers out there, particularly in the restructuring area, bankruptcies and so forth, or motivated sellers that for one reason or another feel that even in the current market environment, this is the time to sell. In terms of when the market will really come back to the levels that we've seen in the past, that's going to take an improvement in the credit markets and, frankly, a stabilization of the economic environment. That doesn't mean that we have to return to significant growth. We can even continue to be on a path to recession or stabilization. But what we need is an elimination of uncertainty, because people really need to have a sense of direction in order to be able to complete these kinds of transactions.
Chris, thank you for sharing your insights with us today. We look forward to speaking with you again in the future.
My pleasure, Mary Kate. Thank you.